I'm going to take you through a trade that I absolutely love making. It's repeatable, it's consistent, it is profitable, and it has high probability on your side. It's actually extremely simple, a little complicated at first, but extremely simple to find over and over again in this market. And I'm going to show you exactly how I do it right now because I just put on a trade exactly what I'm looking for all the time, and I'm already up $30. So I'm going to show you exactly how I made it happen. Now this is how simple it can be, okay? 90% of the time, when a stock gets out of the Bollinger Band, the blue line, when it gets out of the Bollinger Band, you can see here, it always wants to work its way back in. You can see as it comes out, it wants to come back in. It's actually two standard deviations. So just probability wise, once a stock gets two standard deviations beyond where it should normally be, it wants to come back to the first standard deviation. Okay, it just wants to basically, it mean reverse. It just wants to get back to its average movement. So I just take advantage of that, right? So when something gets out of the Bollinger Band, it pops up on my scanner. Now I have a bunch here, and I can show you a little bit later a bunch of other stocks that are doing exactly this. But on this PG, I decided to make a trade. Now I actually bought some options on this run the other day. So I entered in on the trade here once it popped up on my scanner and I saw it moving. So let's go down to a 15-minute real quick. Right, we'll go to a 15-minute and I'll show you. So I buy two contracts and it continues up and keeps going throughout the day. That did well for me. I ended up making just over $200 on that. Not as much as I would want to make, but at least it was a winner, right? So it continues up here and I'm able to make the $200. Now that it's stalling out and it's been a couple days, so we have 1 day, we have 2 day, 3 day, a bit of a run, and we're on that 4th day. If we come back to the daily here, you can see that it's overextended out beyond that Bollinger Band. We have low volume on the day, 3.5 million. The other day was obviously higher. And it doesn't mean that this stock won't continue and have a really great run from here. But like I said, 90% of the time, statistically speaking, the stocks want to at least cool down and chill for a little bit, right? This is obviously overextended, especially with this huge gap here from 147 to 1 day getting all the way up to 156. And then a red day and then another big green bar day. But now the volume is obviously calming down. So we have a confluence of different things happening here where statistically I want the price to come back in through the Bollinger Band. The volume is drying up. We're very extended. We have a big gap up. And kind of the news is settling over here. And over here we can see on the SPY, it's kind of chilling. This is a 1-minute chart of the SPY, the overall market. We're having a bit of a breakdown here. So what I decided to do was sell calls up above. So what I want to do is sell calls up here, because if I'm selling a call, then I'm essentially saying a call is an option. You have calls and puts. Normally, if you get a call, you want the price to continue up if you buy one. And if you get a put, you want the price to continue down. So here I bought a call. I made some money on the way up, like I mentioned. Now I want to sell some calls because I believe that over time, right? Let's go back to the 15-minute. Over time, we're going to see this continue a little bit down this way. So obviously the calls that I sell up here will become worth less and I'll be able to make money on that. Now here's how I actually make that happen. I just came out 7 days out because I think that this is going to be like a bit of a quicker move. We're going to have a little bit of depression in the stock. And then like I said, maybe it will continue up. So I want to just take advantage in the next week and see what happens. So I come at the time just a little bit inside the money. So we're right here. I right click on this is on Thinkorswim. And I come down to sell and I go right to vertical. So you can see here that I actually already did it. So I sell the 152.50. I sell 3 contracts at 362 and then I buy the 157. This is called a vertical spread. But you see I'm buying it for cheaper. So I'm selling one for a high price and then I buy another one for a lot cheaper. The difference between the two, it was about 335. I sold it for 335. But what I'm hoping for when we come over to the analyze tab, very simply, this is just showing me Blue line is at expiration, profit and loss. So it's saying that I have the potential to make $993 if the price is below 152.42 in 7 days. Now, I'm not really shooting for that. I don't think that's what's going to happen. But what I am shooting for is a bit of a depression in the price, maybe to 153. If we come back to the chart, 153 is down here. I don't think that's that crazy for this to kind of curl back around and maybe make its way back down to here. And you can see that if it does do that and it kind of comes back down to 153, then I'm going to be in, if it happened today, I would make about $425. The purple line is showing me real-time profit and loss. If it expired in 7 days there, I'd actually be able to make about $590. Now, what's my risk, you might be asking? Well, I usually like to set for this particular account, my risk is about $150. So that's where the blue line is. And right now, because I got a good entry and everything like that, I'm actually at only risking about 140, something like that, right? So if the price goes over 156.86, which I have written out here, 156.75 I had, if the price actually goes up over here, then that will be my cue to get out. Now, why did I pick that as a level? Because if we go across here and we look at the daily, I can see that right here, this was the next resistance point, right? And I'm being very simple when I do this. It's just a red candle, big red candles, and obviously a knockdown, and we had some volume as well on there. So that's clearly the next resistance. You can see before I tried to get up over here, I couldn't do it, and it came back down, and then never got there again. So 156, now I'm not trying to pick the tipping point of that. I'm trying to pick the beginning of that first red candle where it really started to go, because that's probably where there's going to be a lot of sell orders. So if it ends up getting up over top of that, then that will be my cue to get out. I will lose about $150 on the trade. So we can see here this gray is actually showing me the expected move. So just probability wise, it's showing me that the expected move could be all the way up to 159 and then as far down as 152.94. So to get all the way down to that 153, I'm going to have a pretty big expected move. But it's a good risk to reward for me because it's like, okay, I'm going to lose 150. I do think this has the potential to roll over. And if I can get about 300 out of this, 400 out of this, then that's a pretty good risk to reward ratio. I'm about 1 to 3 on that, which is really good. If I get really lucky and it really starts to tank, then I can obviously make even more at 993. But this is a nice, simple, repeatable thing that you can do over and over again, because I'm essentially just looking at it like, okay, this is extended out and it probably needs to calm back down. So I'm just going to sell calls and let it chill. And time is actually on my side, not against me. Let's look at a couple other that popped up on my scanner. This is obviously extremely overextended, and I'm probably going to look at this one too. We can see on the 15-minute, it's already starting to curl over, and this is obviously extended. I'd have to see what's the volume and what kind of was the news that came off of that. Could be one that I want to ride for a couple days on the up and then go from there. Airbnb, we're getting extended here, but this looks more like a nice move that maybe I would want to be part of on the up. We still have a resistance point right here as well. We'd have to see what would happen there. Here we have one that's also making a really nice move up. So maybe this could be a good one to be a part of to buy some options. But you always have to have in mind that at some point the stock is going to have to cool down, right? So we need to be aggressive on the way up to ride that move as it's breaking out and continuing. And then after we usually get to about that 2, 3, 4 day and we start to see that slowdown in the volume, that's when I want to start selling the calls. Here we have another one. This has gone on a really good run. 1, 2, 3, 4, 5, 6 days in a row. We have earnings coming up. When earnings come out, the options contracts always depress in value because of the volatility, implied volatility. So it's a really good time to sell as well. So that could be a good one to look at. Wow, this one's super overextended. So this is definitely one that I would want to probably be selling on right away. Because like, look at this. This is just a crazy acceleration here from 180 essentially all the way up to 220 in 1 day. Obviously, they had some good earnings or something, and they have heavy volume. It's only 1.4 million in volume. I bet you they don't have a lot of shares. But You get the idea. This is something I probably want to be a part of, to sell above that. Here's another one, super overextended. Now, what do you think? Do you think it's smart to hop in this right now and buy this when it's just gone on a crazy run from 129 all the way up to 145? It probably, if you try to buy some calls here, you might get hurt, because if you bought the calls, they would lower in value as the stock kind of came back down to life, right? Well, if I sell the calls, that's going to help me, because I'm actually going to be able to make some money. So let this be something that you kind of look at in the future and maybe take a little bit more interest in. If you do like it, you can go on a playlist on my channel. There's all kinds of stuff on there on vertical spreads, because I do this a lot. And kind of like I break it down in depth like I did here, and really go really into depth, show you exactly how to do it. So thanks for sticking around this long. I really appreciate it. If you don't mind, throw a like and a subscribe just to keep me going here. I'll catch you on the next one.